Hi guys, welcome back. In this video, I'll be sharing the insights I've learned from the latest earnings report of Micron Technology. I'll also be doing a technical analysis towards the end of the video, so stick around and enjoy this one. We start with revenue right at the top of the income statement. The up cycle and down cycle that you see in this chart is a typical characteristic of the semiconductor industry, and Micron is at the extreme end of the spectrum with a steep rise and a sharp decline. I wanted to find out exactly why there was this steep rise from 2016 through 2018 and also the fall off the cliff right after. So I did some research into the annual reports of 2019, 2020 and the most recent report for 2021. I'll have all of these reports linked in the description box below. Micron has stated that the rise in revenue in 2018 was due to higher demand and higher ASPs. If you are a semiconductor or technology stocks investor, you must track the ASP or the average selling price. The ASP will rise and fall with the demand, and market leaders will generally command higher ASPs compared to the general market players. Micron has provided the ASP numbers in the latest earnings report. As you can see, the ASPs rose in 2017 and 2018 by 18% and 36% and dropped heavily in 2019 and 2020. The revenue dropped by 23% in 2019 and a further drop of 30% in ASP. The drop slowed down in 2020, but the restrictions to shipments to Huawei hampered recovery. Micron is primarily in the memory sector, and this is one of the most volatile of all semiconductor market space. But the good thing for Micron is its memory products are used across the semiconductor markets covering data centers, PC and graphics, and mobile devices. This is still a growing market space. There is no slowing demand for memory space. Even mobile devices have up to 256 GB of space. Micron is expecting industry growth in the low 20 percentile in 2021 and mid-teens in 2022. And their revenue guidance for the next quarter is $7.65 billion. At the lower end of the range, the year-over-year revenue growth will be 29%, still a very decent growth, but lower than the last quarter's 36.6%. It is hard to ignore the previous rise and fall. Are we going to see another dip back to the valleys of 2019 of around 4 billion or even lower? There isn't enough evidence or visibility at the moment. This sector is driven by market demand, and there is no way to tell for sure what the market condition will be in the next 6 months. And Micron has not provided any guidance beyond the next quarter, unlike companies like Lam Research or Applied Materials that have provided revenue guidance until 2024. Moving down the income statement, the cost of revenue has been rising since 2014. Since Micron produces hardware, the manufacturing cost rises with the revenue, and the net effect is pressure on gross profit. So while the revenue has been hitting near the previous record levels, the gross profit is not anywhere near the previous high of 2018. But still, the gross margin has climbed to a decent 47%. The R&D investment has been rising and sits at $705 million, while the sales and general admin is only seeing a marginal increase to $236 million. This is a good trend. Technology companies should invest far more in R&D compared to sales and general admin. After taking away all the expenses, the net income is $2.7 billion, and Micron has been consistently profitable since 2016. The lowest net margin in recent times was 8.4%, and the most recent quarter is 33%. That has resulted in a nice bump up in earnings per share at 238. At the current price of $70, the PE ratio is 14.4, bringing Micron into the value investors range, and the PEG ratio is just 0.39. Again, this is a very good valuation. While the free cash flow has been good for the last 2 quarters, it was in the negative or low positive numbers for the last 2 years. The reason for this is the heavy and continuous capital expenditures that Micron has to invest in its manufacturing facilities. The capital expenditures have been rising since 2014. But the operating cash flow also rose and dropped in the same fashion as the revenue. So overall, the free cash flow also came under pressure. But Micron's cash position has been solid, and they are sitting on a cash pile of $7.8 billion. Their balance sheet is also solid. Assets have been growing while liabilities have remained flat. The biggest asset class is property, plant and equipment, and they have very low goodwill, so their assets are real assets. On the liability side, their debt is at $6 billion, around 10% of total asset, and the debt has been going down over the years. It is good to see that management is allocating the capital to retire debt, repurchase stocks, and they are also embarking on a dividend policy. Micron has never given out dividends previously. Now there is a plan to consistently share the profits with the stockholders through dividends. But I did not see any plans to grow into new areas or through acquisitions. So the growth story for Micron is to invest in their core competency and grow in their market space. While the memory market is poised to grow for many years, it is a volatile market with plenty of competitors. The book value per share has been growing consistently and sits at $39, and the current price of $70, the price to book value is a low 1.9. Let's look at the technical analysis. The previous resistance band was between $60 and $65. It tried to break above this band three times between 2018 and 2020. Finally, the market decided to break above it with a gap up and a strong push. It went all the way to $96 and has now dropped slowly to $70. 70 seems to be holding up well, and the MACD has dropped to neutral levels. It is likely to hold at this level and push up again and retest the $100 mark. That would give a $30 reward. On the downside, I don't think it will drop below 65. The risk would be $5 then, giving it a good risk-reward ratio. But to be safe, it would be better to wait for a breakout from the blue trend channel. Another thing is, it also depends on the overall market. The S&P 500 has been dropping the past few weeks and might place further pressure on the price. Micron is a buy for me with a time horizon of 3 to 6 months. It is a good company, revenue is expected to be strong in the next quarter, and technically it is at a strong support level. Please consider subscribing if you have found this sharing useful, and I'll see you in the next stock analysis video. Bye for now.